Good morning, everyone, and welcome to our webinar on why Cloud ERP is now business critical. I think this is a really timely opportunity to talk about this topic as we're all in varying stages of emerging into what's hopefully our new normals. We have two presenters today, which I'd like to go ahead and introduce, and also just to explain, I am the Queensland Chair of the Business Committee, and I'm also a member of CPA's ESG National Policy Committee. Our presenters today are Richard Ward, the Market Intelligence Lead from NetSuite JPAC. Rich is responsible for the development and execution of the NetSuite competitive strategy and supporting tactical initiatives across the Japan and Asia Pacific region. We're also joined by Graham Burtis from V2 Food. Graham is a senior business professional with expertise in driving business performance, in many cases having restructured business or affecting change within an organisation. Graham's worked in diverse industries, including content, media, property and tourism in Australia, as well as in Asia, as a CFO, CEO and general manager levels. Graham's also a CPA and is currently the CFO at V2 Food, a producer of tasty plant-based meat since 2019 that's good for the environment and healthy to boot. You can find V2 in major Australian supermarkets, and I think it's going to be my job today to try to keep Graham to time. He's got a fantastic story to tell, and I'm sure that you'll enjoy hearing from him. But we'll get started now with Rich. If I can hand over to you, please.
Thanks so much, Tim. Thanks for that great introduction, and good day to everyone. As Tim mentioned, my name is Rich Ward, and I'm a market analyst from Oracle NetSuite. A little bit about myself. I've been in the industry around 30 years and have dealt with many CFOs and CEOs and other stakeholders as they embark on the software selection process. I have an understanding of how CFOs and businesses are impacted as they outgrow their current systems and advise them on how to navigate to scalable cloud ERP systems. Before I invite Graham to join me, I think it would be good to talk about where many growing small to medium-sized businesses find themselves today. Now, I think I need to begin by saying that for many of you, accounting software has done an amazing job and still is doing an amazing job. It was probably your first major software purchase. It allowed you to gain control over your finances and in particular cash flow management, which is so important to small businesses. And it probably supported your growth in a way that spreadsheets and paper documents could not. But in our experience, organizational or business growth introduces complexity, and complexity can present itself in different forms. As examples, you might be experiencing higher transaction complexity. You might be experiencing more transactional volumes that introduces its own level and type of complexity. You might be experiencing process complexity, customer complexity, organizational complexity, and most definitely increased regulation would be impacting your organization. Now, whether you're driving growth or focused on improving operational efficiencies or pivoting to develop new revenue streams, you might be feeling that your software applications and your accounting software can no longer support your business effectively. And if you continue as you have been, something is going to break. We hear this often from businesses who are about to invest in a cloud ERP solution. It's quite funny. It's like, something's going to break, but I just don't know where and I don't know when. Now, there are signs you can look out for that are indicators that your business could be running out of runway, and I've grouped them into 5 key areas just to set the stage for today. The first sign that you could look out for is what I call the functional glass ceiling. Functionally, accounting software is designed to support small businesses with simple functional requirements that cater to around 80% of the needs of their customer base. It is those 20% of customers that might need something like revenue recognition, advanced billing, or multi-sub consolidation as examples. in our experience, multi-sub management and consolidation are the biggest catalysts for businesses to consider cloud ERP over accounting software. Things to look out for in your businesses would include the amount of workarounds and band-aid add-ons that you have, or manual processes like sales order entries or invoicing that you're busy running by hand. Month-end close is often a litmus test of the degree to which your accounting software is being stretched, and often we hear that a month-end close actually happens a month after month-end close. At the end of the day, you need to ascertain how much work has been done inside or outside your accounting software and whether it can successfully support your business today and into the future. The second sign to look out for is what I call the application hairball. As businesses evolve, they often complement their accounting software with other applications to fill the gaps and automate operations. Now, over time, we see that multiple applications with their own life cycles and multiple integrations create an environment that is inefficient and unpredictable. And managing this IT mess becomes a full-time job for somebody. Now, in the corporate space, such complexity is expected. In the small business, well, with small businesses, you often do not have the luxury of affording a full-time IT guy to keep things running. Married closely to application and integration complexity is our third sign, business visibility challenges. Now, different financial and operational systems, integration, and having many data stores generally reduces visibility across the business. We have also noted that as businesses grow, their need for more sophisticated reporting grows, and standard reporting just doesn't cut it anymore. Now, there are a couple of tactical signs that you can look out for inside your organization that are tells that you might have business blind spots. For example, you might be wasting time to hunt that spreadsheet in your organization. Your reporting could be error-prone or out of date. Your sales forecasting consolidation could be extremely laborious and inaccurate. Or you might be suffering from operational wastage and operational inefficiencies just because you don't have that visibility over your finances and operations. The fourth sign is an interesting one. I call it operational friction. Now, this can manifest itself in a number of ways, such as staff having to use more than one system to get their jobs done, or even worse, they might have to do double data capture. I call it the swivel chair effect. I think it's quite a common term where you see an individual actually swiveling their chair between two PCs or two laptops, having access to two different systems and having to do double data capture across systems. You might have incorrect customer data that is resulting in poor service, or you might be experiencing sales that are lost because of slow turnarounds and approvals. Now, the underlying causes behind operational friction can be numerous, but we often find that multiple applications and inefficient integrations have often led to fragmented processes, and rigid applications that cannot be tailored to the business often cause employees to do unnatural acts to keep their business operational. I had a profound learning experience in the last 2 weeks. I had the privilege of talking to 3 different business owners, and it was quite fascinating that all 3 acknowledged the mental well-being and the mental health of their staff and the impact of fragmented systems and inefficient processes have had on not only their organization, but the well-being of their staff. And they've personally taken it on board to address that need and to make sure that when their staff either interact with them in the office or remotely, that it is as optimal as possible. The fifth sign to look out for is transactional volume issues. Now, this could manifest itself either as potentially degraded performance or concurrent user errors, as an example. Now, while some accounting vendors publish transactional or API limits, it often is a vague guideline. Now, the scary part is I've spoken to businesses who've been asked to actually leave their accounting solution because of the burden they are placing on their vendors' infrastructure. Other businesses have attempted to shield their accounting system from transactional volumes by creating batches. The bottom line is accounting software is built for small businesses with low levels of business complexity and low transactional volumes. So what I've covered here up to now are broad observations or trends, and I don't expect all of you today to acknowledge all five. You might be acknowledging a couple, or you might be saying, I'm in a completely unique position. And with that, I think it's a great segue to really introduce Graham Burtis and learn about the individual journey Graham and V2 Foods has taken. Graham, you're online?
I am. I'm here.
Good day and welcome to our discussion.
Thank you. Looking forward to it.
So as Tim warned us,
going to keep us in line, isn't it?
We'll do our best to keep this to an hour. But I think we're all super keen to learn from you who V2 Food is. What do you do as a business?
Well, essentially, we're trying to feed the planet. That's we've got a giant mission, a giant goal that we really are heading towards, and that's because essentially by 2050 we're going to have 10 billion people on the planet, and there physically is not enough land to grow food in the form that we eat at the moment, which is basically cattle. And we're not anti-cattle. We're just saying we're going to run out of space to grow cattle, so we need to do something else. So plant-based meat is everybody's beyond, and those players that probably help to a greater extent in being positives, plant some good by eating food. That'd be a great step forward. So that's the small mission we started.
Oh wow, that's an incredibly disruptive mission and a very exciting mission for all of us to watch. As mentioned by Tim, you had your origin was 2019. Can you give us insight into your 2-year history and the meteoric rise of the business?
Yeah, it's a rapid story from we started it as is this a possible business? And it was started by Jack Cowan and the CSIRO, Jack Cowan of Burger King fame, or Hungry Jack's fame in Australia. And they just said, is there a business here to be done in plant-based meat in Australia? And they spent a couple of months working that out. And in January 2019, they said, yes, there is. Appointed a CEO, Nick Hazel, who is the sort of the head in the research section, to put together a plan for the whole business going forward. So he had 6 months to do something, and we produced our first product in August of that year, August last year, which is the Rebel Whopper at Hungry Jack's. So that was our first thing. So we went from a zero start straight through to producing a world-class product. We didn't just get handed Hungry Jack's. We had to do taste tests. We had to compete for the business, and we got the business. And at that time, we've sold 5 million of those Rebel Whoppers, I think, so far. We're now in Coles and Woolworths, so we've had to start our manufacturing business. We're building a factory. We had to buy a site, start to, we actually bought equipment for the thing before we bought a factory. So we've done all the things that you're not supposed to do in business. We've done them. So and we've done that all in getting up to 2 years now, but it feels like 5.
So you've created the marketplace and then gone and built the factory.
yeah, we had to. Yeah, this is a big challenge. As I say, we've got a lot to do in a very short space of time. Yes.
And the manufacturing operations, are they going to be locally based, or are you going to be owning those operations, or you're outsourcing them?
No, we're a bit of a combination of products, a combination of things that we do. We will make our own products, and we're doing that in Wodonga. We're building a factory in Wodonga. We have another factory which we have in Queensland, in Brisbane, which does other parts of those components. And then those components are taken together, those ingredients are brought together, and we put them together with a co-manufacturer And that co-manufacturer produces them into the meat product that you see in Woolies and Coles or the Rebel Whopper. So they actually combine the ingredients according to a secret recipe and produce the product and do the logistics for us. We know we're not good at logistics, or we don't want to be good at logistics. We haven't got the time to become good at logistics. So we use their distribution networks and systems.
Yes.
Yeah.
So wow, and to your point, in an incredibly short space of time, you've gone from a very small startup to quite a complex organisation.
Yeah, very complex. It's very complex now, and now as we're in every Coles and Woolworths across the country, and all the Hungry Jacks. So that's a pretty big distribution network. We're number one in the plant-based meat category now. So from 0 to number 1, it's a pretty good result.
Oh, most definitely. So just changing tack slightly. Just to confirm, you were running on accounting software in the early phases of V2 Food.
Yeah.
Prior to investing in a cloud ERP, correct?
Absolutely, yeah. We only had we had a small seed funding, just under $1 million or just over $1 million,
yeah.
And we were basically spending that money on research. And there was the CEO, myself, and a technical person, and that was it. Running the business, doing the business. So it was basically just basic accounting software, yeah.
Mm-hmm. So with an organisation starting with 3 people, what prompted you to go out to market then and really explore, the accounting, manufacturing, ERP marketplace?
Well, I suppose in that period of that time, that 6 months, we actually worked out what we were going to do. And we had a plan, we built a strategy, we built our 3-year plan to say what were we going to do and what was the business going to be like. So we knew that we were going to have to build our own factory. We knew we'd have to buy equipment. We knew we would use a co-manufacturing model as well as our own manufacturing. So we knew those things were coming. We also knew that we were going to go from a no turnover to, our aspiration is for more than $1 billion in the next 3 years on a running rate, $1 billion a year. So you can't do that without a lot of changes in the business, and you can't do that on basic accounting software. You just simply can't. So we sort of recognised quite early that we're going to have to change, and it was a lot easier to change for us. I recognised it was a lot easier for us to change to a cloud-based ERP system early rather than later after we, as you said in your introduction, we would have had to run it by spreadsheets and separate systems, and we would have been in a mess, and it's twice as hard to change. So I'm fortunate enough to have the foresight to say, let's do it early.
Yeah, and I think that's what's so amazing about the uniqueness of your journey. I think, when I spoke earlier, you have these patterns that people can look out for, and that's what we've seen generally speaking. And what you really did was, you didn't look for those signs. You didn't wait for those signs that you were running out of runway. You knew it, and you proactively took the decision to invest early on and put down the foundation for your organization. That, in many regards, would be considered high risk.
I don't know whether I'd consider it high risk. I've got to say to you, a good CFO or a good financial controller, they get a budget and they prepare a budget, and they're probably doing a 3-year plan, and they're looking at it. If that should be not just a bunch of numbers on a sheet. It should be saying, well, this is where the business is going to be in 2 or 3 years' time. What will that need at that point in time? And they should be, raising that flag and saying, we've got to do this. I mean, a good example is I took it to the CEO here, who is qualified in accounting as well as an engineer, but and I said, we just got to do this. There's no way. And he went, yes, we will have to do that. So it was quite a simple process. And that's what the challenge is for CFOs and financial controllers, is to raise the business case for this rather than just producing a set of numbers.
Yeah, absolutely. I'm actually going to write that down as a note. I'd like to visit that concept of a business case at the end if we've got time.
Mm-hmm.
So what kind of solutions did you evaluate in the evaluation process?
Well, we were using a good piece of SME software I've used for a lot of other businesses, which has been very functional, very useful. But to do the manufacturing part, the manufacturing became the first critical path thing for us to do. So you could do that, but you'd have to buy an add-on system that integrated into the accounting system. So I had a look at a couple of those. They were quite good, but again, there was two different systems. And then we've got the issue, when you're starting to look at the size of business that we want to be, then you have issues for supply. Co-manufacturing thing is not something that's done very much in add-on type softwares. This is a pretty new system even from NetSuite's point of view. So it offered a better blend, an integrated one. What I didn't want, I want to have. I think we talked about this last time. Is that we want to have one truth, and we want to have an ERP system where basically you can keep everything. It becomes the one storage place for the main parts of your business. That's where you go to say, well, it's in here. This is the thing that I'm looking for. So that becomes really valuable. So the other systems don't really do that because you still have that. I have to go into this system to do the manufacturing and run this to integrate it into the other system. It's less than perfect. And as the business grows, it becomes worse.
Yeah, absolutely. It's sort of like, absolutely. So you've got those multiple applications. You've still got those integrations to manage. You've got those different data stores to manage. And on top of that, you have to look at putting in some form of data warehouse with reporting as well that you'd have to manage as well. Mm. So at the end of the day, you chose Cloud ERP as your solution. You've spoken about the single version of truth. Were there any other qualities around Cloud ERP that really made a lot of sense to V2 Food?
Yeah, I would make lots of sense about it, but I've been around enough systems in my time to realise that the last thing I wanted was another bigger IT department. I don't want an IT department. And why would you take one when you can have it in the cloud? You have no servers, no issues, and you've got total availability anywhere you are for anybody. I mean, it's just if you don't do cloud, you're stuck in 20 years ago, 15, 20 years ago. So, and I think COVID coming along probably just made that so obvious. I mean, everybody has a laptop in our business, and they all can do work from home. They work from anywhere.
Yeah, and I think that's one part of it, right? It gave your employees that flexibility. The other side of the equation is, to your point as well, is you don't want to build an IT organization. And I can see, to my earlier point about the application hairball, I think larger organizations have the luxury of having that IT team. Mid-market organizations do not.
That's true.
You have to focus on your business.
Yeah, and unfortunately, a lot of those decisions get influenced very heavily by the IT team, and they can really misdirect, I think, because it's self-preservation in some. I might be a bit harsh, but sometimes I think it's self-preservation. We also live without servers. Not here, the servers in our own businesses, I mean. Somebody's got to have them somewhere.
Absolutely. Now, in one of our previous conversations, you said that V2 Food was in quite a unique position, and I really want to raise it now. And that for organizations that have a legacy, so have been around for 5 or 10 years, they've got predefined processes. So when they go out to market, very often they're going to go to market in an RFP format or some form of an evaluation with predefined processes, and they're going to go to vendors and say, hey, can you automate these for me? V2 Food, however, had little to no processes when you started the evaluation process. How did you go about then building this unique situation into your evaluation?
I think we had to basically work on reputation, I think, and do quite a lot of reviews of users, people who've used it successfully. And NetSuite's a good example. I mean, there are a lot of good systems, there's no question, but NetSuite, I thought, just seemed to stand out because it could do everything I wanted it to do. And the reputation was, we all heard horror stories. Every CFO on the planet's heard a horror story of us. ERP systems that are behind time, all that sort of thing. And we didn't find sweet stuff when I researched. So the office in Sydney was reasonably easy for me to get to. So we met, we talked about it, and it was basically that was the evaluation process. The other systems were probably more complicated. I don't know. It's a little hard to go back to what your thought process was. We didn't sit down and have full spreadsheet evaluations of systems and ticking it off because we didn't have any systems or any processes. We just knew that we were going to be a $1 billion turnover business at some point in time, and we needed a system. So who could handle that? You know, you probably could put on one hand how many systems can handle it, and then you have a quick evaluation. Yeah. Away you go.
Yeah.
So yeah. And you know, the thing about people automating their current process is probably the first mistake in putting in an ERP system, I think.
Well,
we'll talk about that. We'll talk about that in another webinar.
Well, it's a huge. I wanted to talk about that trend as well, and it's learning. I could call it learning from the evaluation process, and I think, you know, it's a key learning that any CFO or financial controller or CPO on today's call probably could benefit from it as well. You know, and I see it often. From a NetSuite perspective, I've supported almost 1,000 engagements across the Asia Pacific region. And to your point, one of the errors that we see in the evaluation process is what I call the feature function price evaluation, leaving it at that. And the other problem that we see is organizations going out into the marketplace and really looking to automate their existing processes, no matter how inefficient or ineffective they really are.
Yeah.
Instead of actually sitting down and looking for a strategic partnership.
That's true. That's true. I think also seeing what you get out of the box is the best. I think the NetSuite best practice is actually quite useful. I mean, you don't have to adopt it, you don't have to use them, but it's the fact that you've got those best practices documented and saves a lot of time.
Yeah, that's awesome. Changing tack slightly. Now, I really want to put ourselves in the situation of going through the evaluation process. Now, very often I get to hear from small businesses that there often is a perception that moving from accounting software to ERP is expensive. Would you agree with this perception, looking at the experience of V2 Food?
I probably agree that it is the perception. That is the perception, but I think it's probably just an incorrect attitude, perhaps. If you've outgrown standard software, or you think you're going to outgrow standard software, you're going to, you know, it's going to be more expensive. There's no question. ERP is more expensive because it's a better system. It's more hard. And if you're making a decision on the basis of, boy, it's going to cost me a lot more than a basic accounting system, then you're probably not approaching the decision in the right way in the first place. The way we approached that was, we have to have this for our business, and as I often will say to people, is nobody's going to thank me for saving, you know, $20,000 or $50,000 if the system breaks or everybody's got to fight to get the information. Nobody even will think about the difference in the cost. It's negligible in the size of the business. Absolutely negligible. I mean, we give, you know, you pay people a lot of money to do good work, but you've got to give them the tools to do it. And if you treat it on a basis of what it costs you per person, it's not really that significant. Makes their job easier, makes them more productive. I just think the rationale is sometimes just, you know, it's very hard for a small business. I get the perception, you know, you're in a little tiny business with a couple of $1 million turnover, and you think you want to go to SAP or something like that, and you want to pay, and people are talking about $5 million or $10 million or $50 million type ERP systems. That's a bit spooky, I suppose, but that's not what the process is.
Yeah, I think it's fascinating to have conversations with different organizations to understand their attitude and approach towards investing in an ERP system or investing in software. And very often it's polar opposites. On the one hand, the decision is all TCO driven or total cost of ownership driven. whereas some CFOs look towards the business impact.
Yeah.
And you really, look at it from a business impact perspective.
Absolutely. If you'll have millions of dollars, or we'll have tens to hundreds of millions of dollars worth of assets, as in a functional operating assets. Really, when you think about it, the ERP system is probably one of the best value products you've got.
I like what you said there. I'm just going to put it in the shrink wrap and sell it. But in terms of our experience, again, looking at the many engagements I've been on, experience has shown me that, for every dollar that you might save from a total cost of ownership study, if you look at business impact, it's almost a ratio of 10 to 1. When you're putting in an ERP, for every dollar you put in, you're probably going to look at an incremental of at least 10 times the business impact of putting it in versus having old and dysfunctional systems or unoptimized systems versus just saving those few dollars in the evaluation process. I look at it from our point of view. For example, like we're just starting up in China. We start up a subsidiary in China, and for us to add that on now, it's just a phone call and the modules, and we're done. And we've got it's as simple as that. Whereas if I was running other sort of systems, it'd be another whole process to go through. But yeah, I think there's a business impact's far better than trying to work on total cost of ownership. You've got to be conscious of the costs, and I don't think that's, and we weren't sitting there, we didn't start with a full-blown ERP system. We started with the basic model. I've forgotten what they called it, but NetSuite had a court name for it, but Starter Success or something, I can't remember. And that was a very, very simple process. There was no sticker shock as such. Yeah.
Quite straightforward, yeah.
Okay, so moving through the evaluation process, moving into implementation, how did the implementation go, and were there any learnings from the implementation process?
There's always learnings on implementations. Implementation for us was very simple. I must be very honest about that. We were going from a basic accounting system to an ERP, but we probably were in the fortunate position that we didn't have enormous systems to convert. And I took the approach that let's just start with the basic accounting systems first, the financial systems, basic accounting, and we put all those in. And when I say we, it was me. It was a one-man show at that stage to do that. So I did the implementation, and it was quite functional quite quickly. We ran in parallel for a month and switched. So it was quite straightforward. Since then, of course, our processes, we've added processes to it. And so we're in a constant implementation process, I suppose, because we're adding processes all the time. We're adding the manufacturing, we're adding the demand planning, we're adding projects, we're adding the payrolls, we're adding all those sort of systems as we go, as the need arises. So, and as we work out what processes we want to do. So we're constantly implementing. So it was a simple implementation, and it's a constant development for us as we grow.
Yeah, just in what you've said in a couple of minutes is just so profound from a number of aspects. Number one, you consider your cloud ERP as a journey. So you're on a journey, and I've heard that numerous times, even from the head of operations for Monza Royale, spending some time with Ben. He said exactly the same. He said, my cloud ERP experience is a journey. There's never an end state. It's not a project. We don't put it in and then that's it.
No, it's a constant development, and it gets better and better and better. That's what's good about it. Is you don't just set it up, implement it, and walk away. You actually fix things, you change things. It's actually you develop it, and you come up, and you get a team of people saying, "Why can't this do this for me?" And you go, "Well, probably can," and we work out how to do it, and it does. We've done it all the time.
Yeah,
we're doing it all the time.
Yeah, and I love the approach.
It's I mean, that. Sorry, people think about that, and even just your reporting. I think I mentioned when we spoke earlier that, we've got a board that wants to know what we're doing, and because it's so fast, they want to get information all the time, and it's hard to keep them up to date. And so I actually have a plan to roll out a dashboard for the board members so they can do their own inquiries as they see fit as well. And I said, let's do this, and a day later we had a dashboard for them. I haven't given it to them yet, I might have, but we've got for them. We're ready for them.
So could I be so bold as to say that you've got a series of macro phases of implementation? So the macro phases would be, for example, financial, manufacturing, and the likes. But then within that context, you have a series of micro implementations where you're looking at the cloud ERP solution, NetSuite, and looking at how you can extract value, or you're going to it with smaller use cases and going, can we resolve these business problems and then adopt smaller areas of functionality? Would I be correct in saying that?
Yeah, that's true. That's absolutely true. But we're also building a lot of these factories and spending quite a lot of money, tens to hundreds of millions of projects. So it probably was a macro thing, but that was something that we implemented in a 2-week period just to develop that for us to do it, because that's important for us, because for us, building the factories first and then the manufacturing comes next. So, implementing the projects part was probably more critical at the time, and now we're into the manufacturing thing. We actually implemented that now, co-manufacturing first, because we actually co-manufacture before we manufacture. It's a bit complicated, but we've got this all plotted out as to how we do it, and it's working well. Come through well. And then we, as you say, we have the micro implementations off on the side where everybody has their own little pet project that they'd like to have their workload or their work space systemized to an extent to save them time. And interestingly, things like when we started dealing with Coles and Woolworths, it's a requirement that you deal with their EDI, electronic data interface systems. And the beautiful thing is that the people that do that with Coles and Woolworths, and I think 5,000 retailers and wholesalers around the world are NetSuite devotees. So it was absolutely quite a simple process. So we were fortunate in a lot of cases that the NetSuite connection actually helped with those things, made it much, much easier.
Yeah. So just to go back in summary, if I look at the three macro phases of implementation, you did financials, then you implemented projects, and now you've just completed manufacturing. How long in duration were all three phases?
Well, the financials was probably relatively quick. That probably only took me, but I was doing a lot of other stuff as well. But I mean, as one man person doing that, and it was probably just took me a couple of months to do that.
Yeah.
I had to do 40 hours of training.
We've just lost you. Oh, we've lost you.
I think, Rich, while we're just waiting for Graham to come back, we might just get on with a question. And I suppose there's one that's come through chat. Oh, actually, Graham's back. We lost you for a moment, Graham. We'll let you keep going.
Okay, great. I'm just cognizant of the time as well, Tim. So if you're saying questions are coming through, I've just got a couple more, and I'd love to see what the folks on today's webcast have to ask. Okay, so I think one of the questions that always comes to mind is change management. Now, how was the change management in terms of your employees? How long did it take them to make the transition from where they were working on an accounting system to transitioning and working on ERP?
It was quite simple because, as I say, we swapped over the financials, and the financials are quite financials for accountants are pretty similar in most things, and it's just a little bit of getting used to the terminology. It's just a all accounting software is slightly different, but it's all the same fundamentally. So there was no real swap over. We had to run both systems at the same time, so there was no issue with that on the financials. With the change management for other people in other functions, we're in the fortunate position that we're not laying down a new system and a new way to do things. This is the first time they have to do things, so they know they've got to do something, and they all want it. So I suppose we're in the fortunate position that the people want it, and I think that's probably part of the art too, is to say to I wouldn't say we sold it to the internally, but you have to explain to people how it's going to help. Explain the benefits for what you're going to get and how to make their job better and easier and make them more successful at it. That's probably the most important part. It's too easy for CFOs to sit there and go, this is what we're doing and you'll have to do it. Well, that's probably just the wrong approach, probably. Even though sometimes you have to do that anyway. Generally try to encourage them.
No, absolutely, and assisting an organisation going through any form of change management is so critically important. Yeah. And
but we're going through. Sorry, Rich. We go through so much change here because because it's a brand new business going on a rapid. It's nothing like any other business. We cope easily and well with implementing and doing the NetSuite stuff. It's not an issue for us because part of our makeup is to say we want it to be better and better and better. So people do adopt it quite easily.
So you have that culture of change right across the organisation with regards to anything. Yeah.
Absolutely. Yeah. It's in our DNA almost really for everybody.
Yep. When you wake up in the morning, we're going for change.
Yeah. That's it.
So if you look back at the entire process, investing in and adopting ERP software, what do you think, from a very high level perspective, what do you think is the biggest impact that adopting ERP has had on V2 Food?
Well, I think it's just absolutely necessary for us, but I think probably having that one truth is probably pretty important. It just makes everybody's life easier if you know where everything's in the one place. It's easy for the auditors, it's easy for staff, it's easy for it's easy for everybody. It just becomes straightforward. You've got things and you can model all your future stuff based on actual facts rather than other spreadsheets. I mean, we have a system of drives, shared drives and things like that. If you try and find something in there, it drives you mental. Half of it's mine too. So I'd much rather have anything to do with the finances and that sort of stuff in NetSuite. It's much easier. And the CRM, all that stuff. Everything.
Yeah.
Just easy. Projects, even the building projects and the contracts for the building projects, all that stuff just in one place. And we've got the whole team's using it. That's the whole point. It's not just the finance department. It's not the finance department. It's for everybody.
If you're both happy, we might move to some questions from the audience.
Absolutely.
Yeah. Because we'll chat all day, I thought.
And there's quite a few that have come through. So let me start with there's a question that in fact was asked before we started the webinar. So clearly it's an issue on I would suggest a number of people's minds, and that is about the implementation process. And Graham, you talked about how in your case it was relatively easy, the implementation, and Rich also made some comments about how some organisations will try to fit their new systems to their old broken processes, and that can cause issues with implementation. There's a specific question about how we manage the costs of implementation and about budgets. How do you come up with a budget, and how do you stick to it, I guess, is the question.
That's difficult because to be good with budgeting, in any sort of budgeting, I think an implementation in a system is probably just the same. Is you've got to really know what you're going to do, really what you want to do, and what are the cost components of it. But if you haven't really mapped that out properly, your budget's never going to be right. But I probably would, if it was me, I'd rather say, I'd probably rather go, let's say it's going to cost us, let's work at a number of man hours, let's dedicate the time, let's dedicate the resource to it and allow that amount rather than, because it's difficult to define, it's very difficult to define. And what happens, you'll have scope creep. I suppose if you're disciplined enough to keep something within scope, then you'll probably find you're disciplined enough to make sure you get the budget. The problem is, in a lot of these cases, is as you go on and you start using the ERP system, you go, well, actually, this would be better if we did this a different way, and you have a scope change, and you're improving the system at the same time, but there's a budgetary impact. So that's probably not a very precise answer for that, but it's difficult. I think it's a difficult thing to set a budget and make sure you keep within the budget, because you tend to increase the scope of what you're doing anyway. We use in the NetSuite, there's a sandbox system as well, and we are constantly using the sandbox to try new things, to develop new things all the time. And we have on staff in-house consultant now that does all our NetSuite stuff for us. And it's the best resource ever, because we just get instant improvements on a daily basis.
It's a wonderful problem to have, isn't it? That you open the box of the goodies around the Christmas tree and you unwrap your new ERP system, and then all you do is keep finding more and more things that will impact the organisation. And, you talk about ERP systems being feature rich, and I think those people with small business accounting systems can underestimate the value that's locked up in those products. As good accountants, we all remember from our CPA training the doctrine of conservatism, and that often plays out by adding a contingency to implementation costs. And I thought, Rich, you might have an idea of typically your clients, what sort of contingency they might add, whether it's a 10%, a 20%, or whether it's just completely different for all organisations.
Look, it is different. It's such a hard question, just like what Graham said. It's incredibly different depending on the organisation you're dealing with, their level of maturity as an organisation, their understanding of IT and IT-related projects, and their internal discipline. So there's a number of factors that come into how they're going to manage the project. Generally speaking, when I look at the risk surrounding ERP implementations, you could look at, to Graham's point, scope creep. You could look at budgetary blowouts and time blowouts as well. And I think those are three areas that every organization has to look at and build into their evaluation process. And I think there's a couple of things that organizations need to think about. Number one, from an implementation perspective, is your solution provider providing you time and materials or fixed price quotations? Now, if you're dealing with a solution provider that's doing time and materials, you as an organization pay all the risk. What you're looking for is a solution provider that's going to be sharing the risk with you and trying to help you to contain those areas of risk. The other area that I'm very cognizant of is leading practice versus documenting existing process and then going into process automation. Now, when we look at leading practice, there's a massive impact of leading practice in terms of implementation risk. What leading practice does, or named, in other words, adopting practice that's been defined by thousands of clients. What leading practice allows an organization to do is increase the implementation predictability, decrease the implementation risk. So you're doing two things by working with leading practice. You're reducing time to value, and you're reducing the risk of cost blowout. And I think the trap that organizations find themselves in very often is to invest in the solution provider, get a statement of work, and then the world changes. Scope creep happens, and then you just have massive cost blowouts, because what you're doing is you're automating your existing processes phase one. 3 months into the delivery, your business changes, so you go through massive statements of work changes, massive change requests, and so the project just becomes unmanageable. I think, You need to really sit with your solution provider and see what you're seeing in the demonstration is what you get in the implementation, and what you get in the implementation is leading practice, not just an empty box that's going to be a reflection of your existing process.
I think there's tremendous value in engaging with your solution provider early when you're trying to build that business case. Then when you're trying to make this decision about how much you're going to adopt existing processes or customize or develop. And really, once you're live with your system, that's not the end of it. And Graham talked about this journey and about how there's these ongoing activities and refinements and more features to leverage. So I think that the solution provider is your friend in all of these steps, and there's a tremendous amount of experience and knowledge there in seeing so many different organisations use these applications in different ways. There's a lot of wealth of knowledge there to leverage. I'd like to turn to another question, and that is, Graham, you briefly mentioned CRM, and a bit of a leading question. Isn't CRM for the sales and marketing teams? What do accountants need to know about that, and why do we need that in our ERP system?
Well, again, it's probably because of that one truth. I mean, customers are a pretty fundamental part of the finance thing as well as part of sales. So there's a pretty big overlap there, I think. So why not have them all in one place? CRMs are pretty. CRM's not just for customers. I mean, we've got research partners that we do stuff for, and they're vendors really, but we keep all those contracts in the system. We keep all those relationships in the system, so it's easier to manage for us. And it's just that I keep going back to this one truth, but it is pretty fundamental to what we do. Is that there's one place for that all to be. So we don't have lots of customers per se. We have Woolies and Coles and Marley Spoon and Hungry Jack's and a few people overseas at the moment. So there's not a huge number of those, but we've got a huge number of prospects, and they've all got to be kept somewhere. And again, it's just that one place. They can all be getting in one place. And once you've got them in, then you don't have another repeated process. It's just efficient. I just find it efficient. CRM is one of those funny things that people seem to separate out for some strange reason. I've never quite understood why. And then they fight with the sales teams always to try and fill everything in because they don't want to fill anything in. So I don't know. It's a strange fish, the old CRM.
I think it's interesting you mentioned the vendor relationships as being part of that CRM system and your NetSuite application, because I'm sure there are people listening today that are thinking all of that information about vendors is in one of two places. It's in folders throughout a file system that no one can find anything, or potentially emails, or we've got spreadsheets that have got this data in there, and nothing's related. There's no reporting out of those systems. There's really tremendous value, I think, in this concept of an integrated CRM system. And as you point out, it's a lot more than sales and marketing.
It is, yeah, absolutely. It's everything. It's really client relationship management, I think, not customer relationship. Everybody's a client.
Richard, did you have anything to add on the CRM side, or I'll go on to another question?
No, I think Graham hit it. I think he hit it out the park. It's a single view of the truth, and it's really about that single view of the customer. Right across the life cycle, that's so integral. Having CRM and financials and ERP showing the common data model, it gives you tremendous visibility.
Yeah. I'm looking forward to the day when we can dispose of all our filing cabinets. We're 2 years old and we've got filing cabinets already, so so we're not buying any more. Let me tell you, they're going.
Time to get rid of the fax and the checkbook as well, maybe.
That's true. We don't have those.
Oh, very good. Rich, you started talking about tipping points as to why we would move from a small business accounting system to an ERP system. Graham spoke about this single source of truth, and to me that's all about reporting. And really the only reason we do reporting is to make better decisions. But the question is, what other sort of tipping points? When would we recognise that we really need to change. And I would suggest to anyone listening, if you think your business is close to needing an ERP system, you probably already need an ERP system.
Yeah, and Tim, yes, that one. Well, you know how many business owners who have invested in NetSuite have looked back and gone, we made the decision 2 years too late. We're glad we're on it, but we pondered that point way too long. And we just chatted with the owner of Easy Living Elevators, an Australian firm that very, very interesting organization. And he said exactly that. He said, we've been on the platform for 2 years. It took us 6 months to do the evaluation, 6 months too late. We started as an organization of 5 people, today we're 140 around Australia. The complexity of the organization hurt us. And I think at the end of the day, I try to, going back to those tipping points, I think the first observation you have to make as a business owner or CFO is to really understand the complexity of your business today and what it's going to be like in the future. Once you start understanding the shape and form of the complexity, you can then start breaking it down to tipping points. To your point, business visibility is massive, but the lack of business visibility is very often to other factors underneath. For example, having those multiple systems, having those multiple stores, and it's a massive indicator. The other one, and I mentioned it in my opening session, is multi-subsidiary management consolidation. If you look at all the factors such as employee health and well-being, missing inventory, poor sales service, what we've found based on broad trends is organizational complexity. So that's businesses moving from a very, very simple business model, single ownership model, and then starting to move into this multi-company, multi-subsidiary, multi-site management is probably the biggest tipping point forcing organizations away from the constraints of accounting software.
It's interesting. I think it doesn't matter what the complexity is, whether it is, as you say, that multi-entity group. Love to do a show of hands amongst the audience members. We don't have time for now about, who does a consolidation in a spreadsheet and who's got a spreadsheet that they use to reconcile intercompany loan balances. And guys, there is a better way. In Graham's case, complexity, the inventory management, the third-party logistics, there's a whole range of reasons there that is a absolute imperative to move to an ERP product. But every business is different, and I think the things that don't have anything to do with complexity are the number of users or the turnover of the organisation. It's really the processes that will dictate that really we need to make a move. And for some organisations, they can be very small. We are nearly out of time. I'd like us to think about the digital transformation that many of us may be undergoing this year, and thinking about just what's driving this need to change. Some people might suggest that it is your CIO or CEO or CFO. Other of us might say that the biggest driver for me to make these changes is actually COVID. But either way, there is a great deal of uncertainty over the next few years. And I think that my last comments are that we talked a little bit about the costs involved in these systems. And another way to think of costs is, what's my next employee going to cost? And could I become a bit more efficient with a new system? And employees are expensive. IT systems don't ask for leave days or have off days and those sorts of things. So there's plenty of things for everyone to think about. I'd really like to thank Graham and Rich for your presentations today. And just remind everyone that you will receive CPD points automatically to your CPD diary within the next day or so through your attendance at this event. And we'll wrap it up there. Thank you very much.
Thank you. Thanks, Tim.
Thank you.
Bye-bye.
Thank you, Graham.
Bye.
Thanks, Tim.
Thanks to Tim, Rich and Graham, and thanks to everyone for your participation today. In the next 3 working days, you'll receive an evaluation survey accompanied by a recording of this webinar. We really appreciate your feedback as it is extremely valuable to CPA Australia to help us deliver better events for you. Thanks again, and we look forward to welcoming you to another CPA Australia webinar soon.